All right, welcome back to the deep dive. It is Thursday, January 22nd, 2026. And today we are zooming in on a company that really acts as the economic heartbeat for basically the entire planet.
That's a big claim, but it's true.
It is. If you want to know how the global consumer is feeling, you don't look at the stars, you look at this earnings report. We're talking about Procter Gamble.
P&G, the absolute giants, the makers of Tide, Pampers, Gillette, Charmin, Crest.
Everything. If it's in your bathroom, your laundry room, your medicine cabinet, there is a very, very high probability they made it. And honestly, looking at the headline numbers for their Q2 2026 report this morning, my first reaction was, is this it?
It looked a little sleepy, didn't it?
Sleepy is a polite way to put it. We're seeing flat organic sales, flat earnings per share. If you just glanced at the ticker, you'd think, okay, this is a giant company stuck in the mud.
Maybe even losing its edge.
Exactly. But, and this is why we do this, I started digging into the conference call transcript, with CEO Sheila Shajurkar and CFO Andre Schulten. And the story is wildly, wildly different.
Completely different. It's a classic case of the headline masking the real trend.
Yes. Beneath those boring numbers, there's this massive, almost sci-fi level reinvention happening. We're talking about AI designing molecules, autonomous supply chains, and I can't wait to get to this.
I know which one you're going to say.
Diapers made with actual silk.
It really is a paradox. On the surface, you have stagnation. Under the hood, the engine is running at a velocity that is honestly surprising for a company that's, 188 years old?
So that is our mission today. We are going to tear apart the Q2 2026 earnings, the slide deck, and that management call. We want to figure out how a company this huge navigates, a soft economy, hangovers from port strikes, and this pressure to turn liquid detergent into a high-tech gadget.
Let's dive in.
Okay, we have to start with the elephant in the room. The numbers, section 1. The numbers in the ghost of 2025. What actually happened this quarter? Because on paper, it looks like a whole lot of nothing.
So let's break it down. If you look at the top line, net sales were up just 1% to $22.2 billion. But the number Wall Street really cares about, the one the analysts obsess over, is organic sales.
And just to pause there, for anyone who doesn't live in a spreadsheet, organic sales basically strips out all the noise, right? It ignores currency, any companies they bought or sold. It's the raw health of the business.
Exactly. It's the true growth measure. And that number was flat. 0% growth.
Zero.
Core earnings per share, also flat at $1.88. And if you look at their GAAP earnings, which includes restructuring cost profits, were actually down 5%.
Is a flat sales profits down?
Yeah.
If I'm an investor, I'm sweating. I'm thinking, is the consumer dead? Is nobody buying soap? But the CFO, Andre Schulten, he kept talking about base period dynamics.
Right, which feels a little like corporate speak for, it's not our fault.
It does, but you're saying there's something to it.
Well, in this case, he has a very valid point. You have to remember the absolute chaos of late 2025.
Yeah.
You have to look at what happened just 3 or 4 months ago.
The ghost of 2025.
Right. Think back to October 2025. We had major hurricanes disrupting the Southeast. And then in December, we had the port strikes. And more importantly, the fear of port strikes.
Oh, I remember that vividly. Everyone thought the supply chain was going to just collapse again. The news was nonstop about shelves going empty.
Precisely. So what did retailers and regular people do? They panicked. They pantry loaded.
Right.
Retailers ordered massive amounts of inventory because they were terrified of running out. And consumers went to Costco and bought, 6 months worth of toilet paper.
Which is great for P&G's sales last quarter. They must have looked like heroes.
Correct. They pulled a huge amount of sales forward. But fast forward to this quarter, the one ending in December and January 2026.
And everyone's garage is full of Bounty and Charmin.
Exactly. Retailers are sitting on stacks of inventory, so nobody ordered anything.
It's a hangover. A literal inventory hangover.
A massive one. And you can see it so clearly in the family care sector. That's their division for paper towels, toilet paper, the bulky stuff you hoard.
What were the numbers there?
Sales dropped roughly 10%. That is a cliff dive for a stable category. And it's almost entirely because people did all their shopping 3 months early.
So the narrative isn't people stopped wiping their counters. It's people bought way too much stuff last year. That is a crucial distinction.
It is. The consumption didn't change, just the timing of the purchase. And this brings up a really interesting regional divide. Because this ghost of 2025 didn't haunt everyone equally.
It was mostly a U.S. problem.
It was primarily a U.S. problem. I saw that in the data. The U.S. numbers looked pretty rough compared to the rest of the map.
Oh, what?
It was a struggle bus here. U.S. organic sales were down 2%, and volume, the actual amount of stuff sold, was down 3%. That is directly tied to that hoarding. But if you look internationally,
It's like a totally different company overseas. The map lights up green.
it really is. Latin America was up 8%. That is robust growth. Europe, if you exclude Germany, was up 3%. And even China showed 3% growth.
And China is fascinating because everyone keeps writing off the Chinese economy as sluggish.
Right, we keep hearing about the slowdown.
But P&G is growing there.
They are bucking the trend. So the nuanced take for you isn't P&G is failing, it's the U.S. is digesting a surplus of inventory while the global engine is actually humming. And management knew this. They basically told us, hey, January is going to be weird, don't panic.
Okay, so we've established that the boring numbers are largely a statistical glitch, a temporary dip. But let's pivot to the part that actually explains that growth in China. Because P&G isn't just sitting around waiting for the economy to get better. They are engineering their own growth.
This is their whole superiority strategy. That is the internal dogma.
Which sounds a little arrogant, superiority,
Yeah.
but it's actually a technical term for them, isn't it?
It is. The philosophy is very simple, but very hard to execute. In a tough economy, you don't win by being the cheapest. You win by being so undeniably better that the consumer doesn't mind paying a premium.
And this brings us to my absolute favorite part of this whole thing, the silk diaper.
The Pampers Prestige line.
I need you to walk me through this because when I read silk in the transcript, I thought it was a metaphor, like silky smooth.
No, it is quite literal. So the context here is that the Chinese baby care market is brutal. Birth rates are dropping, so the pool of new customers is shrinking every year.
So how do you grow when there are fewer babies? That seems like a math problem you just can't solve.
You solve it by getting parents to spend more on each baby. P&G found this deep consumer insight. Chinese parents, more than perhaps anywhere else, they prioritize softness and comfort as the ultimate expression of love.
They want the diaper to feel like a luxury garment.
Yes, exactly. So P&G went back to their labs and created a diaper that incorporates actual silk ingredients.
That is just wild. Silk in a disposable diaper.
It sounds excessive, but it's brilliant marketing rooted in chemistry. Silk has been a status symbol in China for, 2,000 years? It implies wealth, history, ultimate comfort. The packaging itself is shiny and soft to the touch.
So it's not just a hygiene product, it's a whole tactile experience.
It is.
And the million-dollar question, did it work?
They bought it in droves. P&G turned a struggling category into double-digit growth in those premium segments. They increased their market share by nearly 3 points in just 18 months.
In a shrinking market, that is just impressive.
It proves you can create growth where there is none if the product is distinct enough. And they did something similar in Mexico, but with laundry.
The Downy Intense story. This one sounded less like a laundry product and more like a perfume commercial.
It basically is. The insight there was that Mexican consumers define clean differently than, say, American consumers. In the U.S., clean often means no smell or light breeze.
We want it neutral.
Right. In Mexico, clean means smelling rich, tasty, fruity, and floral.
Tasty. Did they actually say tasty?
That was the word Schulten used. Tasty. They want their clothes to smell like high-end shampoo. They want that scent to project. They want people to smell them coming and say, wow, that person is clean.
So what did P&G do? They couldn't just, add more lemon scent.
No, they used their perfume expertise to engineer a high-intensity scent that blooms.
Blooms. What does that mean? That sounds like gardening.
It's a technical term in fragrance. It means the scent releases powerfully the moment you interact with it. It fills the room. They launched Downy Intense with this technology and saw double-digit growth in a category that was previously considered sleepy.
So the takeaway here for you isn't just about diapers or softener. It's about the formula, it seems to be. Deep cultural insight plus hard science equals pricing power.
Exactly. You can charge more and you can grow volume if you're delivering a sensory experience that competitors can't match. You stop competing on price and start competing on delight.
But, and here's the pivot to our next section, you can't generate those insights or those molecules without data. And this is where the reinvention comes in. The CEO used that word a lot, reinvention.
It's a heavy word for a soap company. Usually you hear reinvention from a tech firm that's, failing and trying to pivot to crypto or something.
Right, but he's talking about building a data lake with petabytes of information.
Petabytes. That is an absurd amount of data. We're talking about Google-level data storage.
So what are they doing with all that info? Is it just tracking how many diapers I buy?
That's part of it, but the really exciting part is the R&D. They are using generative AI for what they call molecular discovery. This is where it gets really sci-fi.
Okay, break that down. What does that mean in practice? How does AI help make soap?
Well, think about how you traditionally make a new detergent. You have chemists in white coats mixing fluids in beakers, testing them on stains, failing, rinsing, trying again. It takes months, even years.
Just trial and error.
Yeah.
That is a method.
Right. Now, they are using AI to simulate how different chemical molecules will interact before they ever mix a drop physically. They mentioned Tide Evo, that new tile form factor.
Yeah, the weird dry tile thing. I've seen the ads.
That product exists because AI helped them simulate the chemistry significantly faster. They can model how the fibers of a shirt interact with a stain molecule and a detergent molecule, all in a virtual environment. They run thousands of simulations in the time it takes to run one physical test.
So AI is literally inventing the soap for them, or at least speeding it up by a massive factor.
It's accelerating the invention. It lets them find formulas they might never have stumbled upon manually. And this whole tech pivot, it extends to the supply chain too, supply chain 3.0.
That sounds like a buzzword bingo winner.
It does, but the application is real. The goal is an autonomous supply chain. Imagine a system where the factory reacts to a purchase in real time without a human ever having to approve a spreadsheet.
So I buy a box of Pampers at a Walmart in Tulsa.
And ideally, the system sees that signal instantly. It tells the factory, we're down 1 unit in Tulsa, and the production line adjusts, or a truck gets rerouted.
Why is that speed so critical now? I mean, P&G has been fine for 100 years without it.
Because the retail landscape has completely fractured. Jajurkar made a fascinating point on the call. Retailers are becoming media platforms, and media platforms are becoming retailers.
Meaning Amazon is basically an ad company and TikTok is basically a store.
Exactly. The path to purchase used to be linear. Watch TV ad, go to store, buy soap. Now, you see an ad on Instagram, research it on Google, maybe see a TikTok influencer using it, then buy it on Target's app.
It's a messy web.
It's totally nonlinear. You can't track that with spreadsheets. You need an automated system, an AI, to track that consumer and make sure the product is there when they finally click buy. If you aren't instantaneous, you lose the sale.
It's wild to think that P&G is quietly building this massive tech infrastructure just to sell us razor blades.
But I guess that's the moat now, right? A startup might make a cool organic soap in a bathtub, but they cannot replicate a petabyte-scale data lake and an autonomous global supply chain. That's P&G's defense.
Which leads us perfectly to their strategy moving forward. They have this catchy rhyme for it.
Yeah.
Stronger core, bigger more.
Marketing does love a rhyme. It sticks in the brain.
They really do. But let's translate. What is stronger core?
Stronger core is playing defense. It means taking your bread and butter, the standard orange jug of Tide liquid, and just making it undeniably better.
But why mess with the classic? If it ain't broke, don't fix it.
Because of private label. Store brands, Costco's Kirkland or Walmart's Great Value, they're getting better and cheaper. If P&G stands still, the consumer will switch to the cheaper option because the quality gap shrinks.
So they have to constantly raise the bar on the basic product.
Exactly. So you feel like this store brand is a downgrade.
Okay, so that's defense. Keep the main stuff amazing. What is bigger more?
That's offense. That's creating entirely new categories. The Tide Evo tiles, the new forms of Olay, products that don't just replace a sale, but create a new reason to buy or a higher price tier.
And notice what isn't in that strategy.
Cheaper prices.
Never mentioned discounting.
Correct. They were very explicit about this. P&G is resisting the urge to drop prices just to chase volume. They believe if they lower the price, they devalue the brand. It's all about it costs more because it works better.
That's the bet. They are betting that even cash-strapped consumers will pay for performance.
Oh.
It's a risky bet, but it's the P&G way.
It is. They would rather sell fewer units at a higher margin than get into a price war they can't win. It connects back to that media shift we mentioned, the whole attention economy.
Right. You have millions of distractions.
Yeah.
P&G knows they can't just shout louder.
They have to be smarter. And that's why bigger, more matters new. Innovative products stop the scroll. You stop to look at the weird Tide tile. You might not stop for another jug of liquid. So innovation becomes a media strategy.
So bringing this all home, the outlook, we had a flat quarter. Is management freaking out about the rest of 2026?
Not at all.
Right.
They held firm on their guidance. For the full fiscal year 2026, they still expect organic sales to grow up to 4% and core EPS to grow up to 4%.
Wow, that implies a pretty serious rebound in the second half of the year. If the first half was flat, the second half has to be booming to hit that average.
It does. And they listed 3 reasons for that optimism. First, the inventory headwinds. That toilet paper hangover should be gone.
Nature calls. It is inevitable.
Indeed. Second, those new innovations we talked about, Tide Evo, new Olay jars, are hitting U.S. shelves right now. And third, they're already seeing family care sales bounce back in January.
So the dip was temporary.
That's their story. And they are backing it up with a staggering amount of cash. They plan to return roughly $15 billion to shareholders this fiscal year.
$15 billion, that's the GDP of a small country.
It's massive. $10 billion in dividends and $5 billion in share repurchases. You don't hand out $15 billion if you think the ship is sinking. That is a flex.
And one last number that really impressed me was the productivity. They mentioned 270 basis points of productivity improvement.
That's huge. In plain English, that means they became 2.7% more efficient at making and moving stuff. That translates to hundreds of millions of dollars in savings.
But they didn't just pocket that money to boost the bottom line, did they?
No, and this is crucial. They reinvested it. They poured that savings right back into marketing and R&D.
It's a flywheel.
Exactly.
Yeah.
Be efficient, save money, spend money on ads and silk diapers, get more data, be more efficient. That is how they suffocate the competition.
So let's wrap this up. We started with a boring headline, flat sales, flat earnings. But what we found was a company that is frantically paddling underneath the water.
Yeah. P&G faced a quarter of statistical anomalies, but instead of using that as an excuse, they're doubling down on a high-tech, premium innovation strategy.
For you listening, the takeaway here seems to be about adaptation. P&G is a dinosaur in terms of age, but they are acting like a startup, building data lakes, simulating molecules, reinventing supply chains.
The lesson is that growth isn't given, especially not when you're that big. Growth's engineered, and sometimes it's engineered with algorithms, and sometimes it's engineered with luxury materials, but you cannot sit still.
And here is a provocative thought to leave you with. We talked about how successful those expensive silk diapers are in China, a country where birth rates are dropping. Parents are having fewer kids, but spending way more on them.
It raises a big question about the future of consumption.
It really does. Are we moving toward a world where basic goods disappear? If P&G's strategy is premium or nothing, does that mean the future of consumer goods is entirely about luxury experiences? Will the middle ground of just plain old diapers eventually vanish?
It's possible. In a world of abundance, good enough might no longer be good enough to build a business on. People might demand that everything, even their detergent, gives them an experience.
Something to mull over the next time you're in the detergent aisle staring at a tile versus a jug.
Yeah.
Check the show notes for links to the earnings report and the transcript if you want to geek out on the data yourself.
Always worth a read.
Thanks for listening to The Deep Dive. We'll catch you on the next one.